One of the delights of being a business owner is that taxes will come into the mix at some point, whether it's VAT, income tax, PAYE, corporation tax, to name but four. You need a smart approach to tax in terms of saving as you go. Now, as a small business owner, managing your taxes can seem very daunting, but there's a simple and effective strategy that can make your life much easier, and it's saving for your tax as you go along on your business. Do it on an ongoing basis as opposed to scrabbling around to find that money. Think like an employer, but act like a boss. In this video, I'm going to share the key reasons for adopting this strategy, and also I'm going to be sharing some tips as to how you go about this, what that means in practice. Now, one of the key benefits is to avoid that last-minute scramble, creating anxiety and pressures on you, that headache that you don't need, in suddenly finding the money that you need for your end-of-year tax, for example, for your personal tax return, the corporation tax. It can be a nasty surprise. If you've not been saving throughout the year and not been putting money aside regularly, you avoid the stress of finding that large sum at the last minute. Remember, if you're an employee, tax is taken off as you go along. Adopt that same approach when you become that business owner. That ensures you're not scrambling to meet that deadline. Are there other benefits? You bet your life there are. You maintain stability of cash flow. Consistently saving for taxes helps you manage your cash flow much more productively. It prevents those sudden large outflows of cash, those spikes, which can disrupt your business operations. Think of it as suddenly having to find that sum of money when it's not there to begin with. Think of it as steady, manageable expense, which is what tax is fundamentally, rather than a huge, unexpected one. There are more benefits, folks, to adopting this approach. You build a financial cushion. Saving for tax as you go along, whether it's on a weekly, quarterly, or monthly basis, means you're going to be prepared. If your tax bill is lower than you expect, that's always going to be good news. You will have that financial cushion, you'll have surpluses. That extra money can be used for unexpected expenses, investment opportunities, or simply a peace of mind. And if you've done it wisely, you may even benefit more by using that spare cash and interest perhaps to treat yourself to whatever you can treat yourself to. Those benefits don't stop there. You will stay compliant, and staying compliant is good news. And you avoid penalties, and certainly for missing tax deadlines, by the way, folks, as a bare minimum, there'll be interest levied and there will be default penalties levied, certainly in the context of corporation tax and income tax. It means there's unexpected expenses, unexpected interest charges, and you don't want that. They're avoidable. You don't want to have to work more just to put yourself in the same position. Staying compliant with tax laws means it's good news for peace of mind. It avoids unnecessary costs and unnecessary conversations with the authorities themselves. Even more benefits, it simplifies your accounting approach. Putting money aside on a regular basis simplifies the accounting. It makes it easier to track the finances. Where does that money go to? Tax, for most of us, is a cost of doing business. Understanding your business's financial health when tax gets factored in and managing that cash flow is important. You can see how much money you've got for yourself, your investments, your running costs, rewarding yourself, and also for making sure you've got those funds to pay your taxes. Business planning is improved, and when you save for your taxes consistently, you get a clearer picture of your business's profitability. That means you can plan with much better insight. You can make informed decisions about expanding your business, whether that's possible, investing in new opportunities, or hiring more staff, or rewarding yourself at a better rate as well. What I also like about this approach about saving for your taxes as you go along, it's that you foster and create that professional mindset. It makes you think like the employer who's responsible for the business ultimately, but you act like a boss. It shows that you're serious about your business's financial health, your business's compliance, and you're being diligent. And this professional mindset rubs off, it gives you confidence, and it inspires confidence amongst your team. Now, all very well having looked at the benefits, but what about some practical steps that you can implement to save for your taxes? Now, we've got the bare bones as to why we should be doing it. What about some practical steps though? The first thing you need to do is to estimate your tax liability. Work out roughly how much tax you'll owe based on your business's income, your business's expenses. Your accountant or tax advisor can help with this. We help our clients do this. You can estimate based on what it was like last year. If you don't quite have the numbers to hand, then there are resources we have, like a tax calculator. We can plug in those numbers and have nothing worse or less an estimate of what that should be. Create a separate savings account. So depending on who you bank with, you can either create a separate deposit account, a separate bucket where that money that you're saving gets squirreled away. I know many clients who use their bank facilities and will have separate accounts, and you may even be able to earn interest on those deposits, and that's going to be great news at the end of the year, but that interest can feed into some reward. And also you're going to avoid the temptation to spend it. And if you can, a 30-day savings account means you can't just instantly dip into it. Save regularly. And it could be a weekly basis, it could be a monthly basis, it could be quarterly. Doesn't matter. As long as you've got good savings habits. My recommendation is weekly or monthly. My ideal recommendation, folks, is every time you invoice a client, you put a percentage of that away to cover the taxes in connection with that. Every 3 months, every 6 months, review and adjust periodically. If your income goes up, if your income goes down, you may decide that you want to modify what your savings. Again, if you're not quite sure what that number should be, seek advice, and it's possible to get a working number, a percentage of turnover as to what you should be put away, or a fixed cash amount. Where you can, set up a standing order perhaps. Set up regular transfers. If you think you're going to miss it, your diary is going to be congested and you might forget to do that, set up a standing order, make an estimate, set that standing order up, and you don't have to worry about doing it. Monitor and check. It helps you keep disciplined. Good records are an essential building block of the ecosystem of your business, but it also helps you gauge what your income and expenses are, what your ongoing profitability is, and you can work out then the tax that's due accordingly. You can also do the same, by the way, folks, when it comes to estimating VAT outcomes based on previous returns, based on the records will feed in to giving you that answer that you need. Having a good ecosystem, having a good digital system here serves more benefits than just tax, but today we're talking about tax. Now, what can we conclude? Saving for your taxes as you go along is a smart strategy for small business owners and pretty much for anyone. It helps you avoid those last-minute stresses, it maintains a stable cash flow, and it makes sure also that you stay compliant with the tax laws. Who wouldn't want that? It simplifies your accounting, improves your business planning, and fosters that professional mindset. If you follow these practical steps I've outlined previously and above, you can ensure that always you're going to be prepared for that tax bill. Until next time, folks, happy saving. And remember, think like an employer, but act like your boss, and take control of your business finances and your taxes.